AI stocks buckle, oil skyrockets, and the smart money sells. But what are the billionaires buying next? On the surface, it looked like just another ugly red day on Wall Street. The S&P 500 dropped about 1.2%. The Nasdaq sank nearly 1.8%. And the market logged its fourth straight loss. But billionaires don't just look at the index. They study who is falling, who is rising, and what that rotation says about the next big move. Today's signal? AI superstars are finally wobbling. Old-school oil just flashed a surprise strength signal. And beneath the noise, the market may be quietly de-risking. Let's break down what the billionaire playbook is likely seeing here. Headline said, "Worst day in nearly a month. The S&P 500 closed around 6,721, down nearly 79 points. The Dow slipped over 200 points to just under 48,000. The Nasdaq dropped more than 400 points to about 22,693. But here's the part billionaires care about. Inside the S&P, slightly more stocks rose than fell. This wasn't a broad panic out of everything. It was a targeted hit on the giants that had carried the market, especially AI and data center plays. When the generals retreat while the foot soldiers advance, that's a classic rotation signal. For the last few years, billionaire portfolios have been built around one simple truth. AI and mega-cap tech have dominated returns. But every leader trade hits a point where expectations stretch too far. Today added more evidence that AI is entering that phase. Broadcom dropped about 4.5%. Oracle fell over 5%. CoreWeave slumped more than 7%. And Nvidia, now the single most influential stock in the S&P, lost nearly 4%, acting as the heaviest weight on the entire index. Even Constellation Energy, a power company that had been priced for insane data center demand, fell almost 7%. Billionaires look at this and ask three questions. 1. Are these stocks finally pricing in the reality of slower AI adoption than the hype promised? 2. Has the market over-levered into this theme, with companies taking on too much debt to fund AI build-outs? 3. Is this the start of a leadership rotation or just a shakeout before the next leg higher? A key data point. A UBS survey of relatively big businesses found that only about 17% are running their AI projects at scale in real production. The number is rising. But compared to the trillions in AI market cap, that's still early-stage adoption. Billionaire interpretation. AI is absolutely real, but the revenue and profit curve may arrive slower and more unevenly than Wall Street's most aggressive narratives. That mismatch between story and cash flow is where they either trim winners or accumulate on pullbacks, depending on their time horizon. Next, they look at the real economy signals. Lennar, a major home builder, fell about 4.5%. The company beat expectations on revenue, but delivered weaker profits than analysts hoped. Its executive chairman said conditions remain challenging. Buyers are less confident. They want discounts and more affordable options. And Lennar responded by offering only limited guidance about the future. Billionaire takeaway. The average consumer is still feeling the squeeze. Housing affordability, confidence, and rate sensitivity remain real headwinds. This doesn't necessarily scream recession now, but it does say, don't over-assume a roaring, broad-based consumer boom. Progressive, the big insurer, also slipped about 2% after reporting that its net income for November fell 5% year over year. Together, those are subtle signals of stress, the kind billionaires log for their macro dashboards. Now to the upside, energy. Oil had been bleeding lower much of the year on expectations that global supply would easily cover demand. Then President Donald Trump ordered a blockade of all sanctioned oil tankers heading into Venezuela, a country believed to be sitting on one of the world's largest oil reserves. Instantly, the supply narrative changed tone. Benchmark U.S. crude jumped about 1.2% to around $55.94. Brent crude, the global benchmark, rose roughly 1.3% to almost $59.68. Energy stocks snapped higher. ConocoPhillips jumped about 4.6%. Devon Energy rallied more than 5%. ExxonMobil climbed around 2.5%. In billionaire language, that is a geopolitical risk premium re-entering oil prices after months of complacency. They see this and think, AI multiples are compressing. Oil is picking up a bid on political risk. Time to rebalance some chips from hype into hard barrels and cash flow. Billionaires also watch deal flow, because it tells them where management teams see value. Netflix inched up about 0.2% as Warner Bros. Discovery's board reaffirmed its support for Netflix's buyout offer of the Warner Bros. Business, instead of a hostile bid from Paramount Skydance for the entire company. Yet Warner Bros. Discovery fell around 2.5%, and Paramount Skydance dropped more than 5%. Translation: even as the streaming giants fight for scale and libraries, public markets are skeptical that buying growth will be painless. For billionaire portfolios, that's a signal to be selective, favoring the acquirers with the best balance sheets and execution, rather than chasing every deal target blindly. In the background, the bond market stayed relatively calm. The 10-year Treasury yield held around 4.15%, with traders waiting for a key report on consumer inflation. For billionaires, that matters because everything else, from AI valuations to housing to oil demand, rests on the cost of money. If inflation comes in hot, yields could spike, pressuring growth stocks further. If it cools, the pressure on AI names may ease, at least temporarily. Abroad, markets were mixed. Europe chopped sideways. South Korea's Kospi index jumped about 1.4%, cutting its weekly loss and hinting at selective strength in Asia. Put it all together, and here's how a billionaire wealth signal reads today. Number 1. AI leadership is still intact on a multi-year view, but the easy phase of the trade is over. When Nvidia and its peers cough, the entire index will feel it, and billionaire capital will use those moments to either trim or rotate. Number 2. Under the surface, the average stock is not collapsing. More names were up than down. That's a sign of broad but quieter participation, even as the former darlings correct. Number 3. Real economy sectors like housing and insurance are flashing yellow, not red. Consumers want discounts. Margins are under pressure, but there's no clear everything's breaking moment yet. Number 4. Oil just reminded everyone that geopolitics still matters. In a world obsessed with digital AI stories, one order targeting Venezuelan tankers was enough to give old-fashioned energy stocks a jolt. That's classic billionaire rotation, out of stretched narratives into under-owned cash generators with renewed catalysts. If you're trying to think like the billionaires, here's what to watch next. Does AI selling stay orderly, or do we see a real capitulation moment? Do oil and energy continue to build strength, suggesting a lasting shift in leadership? And does Thursday's inflation data push the 10-year yield sharply away from that 4.15% line? These are the billionaire wealth signals hidden in an ordinary-looking red day. If you want daily breakdowns of how the top 1% reads moves like this and where their capital is likely rotating next, hit follow and subscribe. Don't just watch the headlines. Watch the signals the billionaires actually trade. Thanks so much for watching today's Billionaire Wealth Signal. If you found these insights helpful, please give this video a like and share it with a fellow investor. Don't forget to hit that subscribe button and turn on notifications so you never miss a daily signal. We appreciate you being part of our community. See you in the next one.